Hi everyone, I'd like to thank you for joining for my second video. I've got Jen Pintos from Guarantee Rate helping us today. She's going to break down interest rates for us, explain them to us. Jen, do you want to introduce yourself?
Hi Sean, thanks for having me. My name is Jen Pintos and I'm a loan officer with Guaranteed Rate Affinity. What questions can I answer?
Pretty much everything about interest rates. I know they affect my clients, but I have no idea where they came from. I don't know why we're at 6% one day or 5.5% the next day, why we were running at 3.5% and then in November we were at 7.5%. Like, that makes no sense to me.
I understand why that sounds crazy. Great question. So mortgage rates are impacted by a number of factors. Today I'm going to focus on inflation since that's what we're experiencing. As you know, inflation is a rising cost of goods and services, right? Inflation basically decreases the value of our money, therefore impacting everyone's buying power. And rates and inflation go hand in hand. So when inflation is high, like right now, rates will increase. When inflation is low, rates will decrease.
But is there more that affects the interest rate than just inflation?
Yes. So something that most homebuyers misunderstand is how the Fed rate impacts interest rates. The Federal Reserve doesn't actually set the interest rates for mortgages. They set the federal fund rate, okay? And when the Fed increases its rate, it becomes more expensive for banks to borrow from one another. And what happens is they actually pass that cost on to consumers, of course. And you see that short-term interest rates start increasing, like on lines of credit, car loans, and to an extent mortgages, because it's all kind of tied together.
All right, so when are we going to see the next big change, or are we going to see another big change?
So the next Fed meeting is actually on the 31st. So the following day, we will actually know what the new Fed rate is. Mm-hmm. Right now, we're at 4.5%.
4.5%?
Correct.
So we're at 4.5%. Why are we paying 6.25%?
Well, because it's not just the Fed rate, it's inflation.
Okay.
It's all of economics, basically. But yes, your 30-year fixed right now is at 6.25. But in October, when the Fed rate was actually lower, we were, the rate was actually peaked at like 7.5.
Right.
So we're actually seeing some ease. But the only reason that you saw rates come down kind of, starting in November, December is because we saw some easement in inflation. So as inflation gets better, you should see rates getting better. But I think there's a lot of work left to do when it comes to inflation. So rates will continue to fluctuate a lot.
So we're going to see 5.5 and 7.5 potentially.
I mean, I would love to see 5.5, but I don't think, I just don't know.
Yeah.
We just
don't know. It's a guessing game.
But it is a guessing game, yes. And I think it's important for people that are buying houses to remember that you can always refinance. So when you're buying a house, yes, you should be comfortable with today's rate, the rate that you're buying it at, and that monthly payment. Mm-hmm. But just know that that's not forever. So we are hopeful that rates will come down in the near future. And at that point, most of our buyers should be able to refinance.
Right.
If they are still employed.
Fingers crossed, we all have jobs.
Yeah.
All right, Jen, I appreciate that. That was a great breakdown of the rate. I'm still a little confused, so when I get clients, I'm going to send them to you first.
I would appreciate that. Thank you so much.
Just like, I'd expect someone to send people to me about real estate.
Absolutely. Right. Thanks for watching us, and if you guys have further questions, please give us a call. We're always available to help you out.
All right.
Until next time, bye.
See you guys.